Okay, welcome to the South Florida Mortgage Report. It's your hat dude wearing mortgage guy, Billy May, always joined by President of Capital Partners Mortgage, Craig A. Garcia. Happy Friday, Craig.
Happy Friday, sir.
I'm wearing my hat and kind of because all the news is coming out of Davos in Europe this week, and with Greenland and all this other stuff. I kind of wear my hat a little different today. A lot of Europeans wear the hat like this.
You have a beret on?
I have the beret, my Irish heritage here actually here as well.
Very
Uh,
apropos.
Yeah. So we're going to talk about a few different things kind of in the news this week, Craig. And we'd always talk about mortgage rates. Talk about that, but also kind of some of the things that's been happening in the news that's been influencing these rates. Now, the Freddie Mac survey came out. Rates kind of trended slightly upwards, and the bond market kind of had some issues this week. And it's funny. President of the Trump administration is trying to do these things to help interest rates, and they've been getting better for a number of reasons. But then also we have these outside influences of these world influences or events and things that happen in the news, Craig, and like with Japan and so forth, that had a negative effect on mortgage rates this week, right?
Yeah, so it's obviously a bit kind of event newsworthy weekend in the global markets, financial markets, and then the bond markets too. So you had Trump coming out saying that he was coming hard for Greenland and that he
Yeah,
was going to impose tariffs against these European nations that had come out against him. Markets definitely didn't like that, and that even got some people, some of these pension fund managers over in Europe talking about that they wanted to divest themselves of U.S. Treasuries, that the
right.
U.S. wasn't a good investment anymore. There's too much fiscal irresponsibility. Uh, that's typically not great for mortgage rates. So if in general the mortgage rates get better and interest rates get better when you've got more people wanting to buy and invest in U.S. Treasuries and in mortgage-backed securities, and so the idea that if some sectors of the global world are going to pull back from investing in U.S. Treasuries, um, it's not great for us, especially when we're looking to we have pretty big deficits. We have a lot of stuff that we're trying to pay for. And that's how we get the money for all that is we issue treasury bonds. And that's how the government gets money. They basically borrow it. And traditionally speaking, the world has seen US treasuries as a risk-free investment.
Yeah, the safe haven. Exactly. And that's kind of, I think we're going to segue. That's kind of, let's talk about what happened with the bond market in Japan. That news also had a big influence as well.
That's right. So Japan had come out and they made some news in the bond market a little bit too. Japan basically came out and the prime minister, they wanted to go for a snap election here in early February to institute major policy changes, one of which was they wanted to suspend sales tax on food for 2 years, which the markets saw as obviously going to cause a strain on the government. It's going to cost the government a lot of revenue, which was going to be kind of inflationary there and cause people who are investing in the Japanese bonds to require higher rates potentially. And so that's what happened. The bond market over there got worse and that bleeds through to everything else. So interesting that's, I think there's certainly a lot of talk that a lot of the economies of the world are in more, the governments are in more debt than they ought to be. And that's obviously, it's typically not good conversations to be having when you're trying to drive rates lower.
Yeah, yeah, and we were seeing, I mean, up until earlier this week, rates had been trending downwards for a number of reasons. The survey came out yesterday, rates kind of slightly. Today we're, it's a little okay today, but
Yeah.
they were trending downwards. And this week, all of a sudden, all those things happened in the news. We saw the rates kind of actually shot up. I think it was on Tuesday. Just when we say shot up, we relatively speaking, very very minor, but there was
Yeah.
some increases.
Yeah.
Tuesday, Wednesday, and even yesterday. It's kind of but just funny how
Yeah.
the ebb and flow of that, and then it flows out with the news with these markets, right?
Yeah. No, I mean, all things considered, so you had all that stuff going on. GDP came out this past week. That was a little bit better than expected. None of that stuff that was talked about was really great news for rates. But rates didn't get, hammered, so that's
Yeah.
is probably, that's a good sign.
Right.
And then, thankfully, Trump came out and kind of backed off of his tariffs thing and said, he's not going to do that, and that they
Yeah.
have the framework for a deal. And
Yeah.
so, there's a lot of stuff happening pretty quick,
Yeah.
so.
Maybe he
So yeah,
wants to develop Greenland, maybe have some build some housing there or something. I don't know.
I don't think housing is what he's got in mind.
I
So
hear you.
yeah, but who knew we would be spending so much time talking about Greenland?
I
Yeah.
know. I
So
know. Kind of crazy stuff. But there's a couple of things he did this week too, or he announced this week that had impact as well. They're trying to do things to help the housing market. One of which is, I believe he signed an executive order. So institutional investors, BlackRock, some of these big companies are going in and buying tons of homes in certain areas. And we've discussed that before, you and I. And
yeah,
it's impactful in certain areas, but nationwide it's not. But in certain areas it is. And he's saying, think executive order now, right, Craig? They can't go into these areas and just blanketly buy all these houses, right?
yeah, and I don't know how much it was happening recently anyway, right? But the idea
Right,
that they're not going to come back in if these opportunities present themselves and scoop up a bunch of cheap houses, and
right.
that's going to leave more opportunities for the regular people to buy those homes.
Yeah.
I think it's a good thing. Is it
Yeah.
going to is it going to reshape affordability nationwide? Definitely not. But it's certainly not a bad thing for the average buyer who's trying to buy in their community not to have to compete with BlackRock, for
Yeah.
example.
Yeah. I mean, we do see that in our business periodically. I mean, we've seen people that, it used to be that if a cash investor was coming in, there was a significant discount on the purchase price, but it's not as much of a big of a discount as it used to be. I mean, so we do see that periodically. So it could help some buyers.
So, Bill, it's interesting. And I hadn't thought about it until now, but I'm curious if this executive order would impact some of these companies that really position themselves to be cash buyers. And really an alternative way for a buyer to sell their home. Is that going to impact them? That would be pretty interesting if that was
That's
the
a good
case.
question. I'm
Yeah,
sure
yeah. See,
the,
my mind went to BlackRock and everything initially, which is these big institutional investors buying for
sure.
themselves. But then you've got this other subset of companies, more definitely newer into the marketplace. Zillow tried to be one of them, where they said, "Hey, if list your home, or here's what we'll pay you for your home." I
Yeah.
mean,
Right.
I would think Zillow would be one of those institutional investors. That's kind of a whole. I don't know that they did very well with that
Yeah.
offering as a business model. It's
Yeah.
tough to make a living trying to buy homes and turn around and then sell them and have that be a model. It's a lot of carry costs. I mean, that's an expensive way to do things. But the idea that they can't do that, yeah, I don't know how much that would impact things. It's interesting. I would
Yeah.
probably be hearing more about if that's going to impact those models, and I'm not sure to what extent those models were really pushing that line of business anymore. Anyway, so
Yeah,
I'm not sure.
maybe it's more of a PR move. It sounds good, and some people really like that. That news, and also the other piece you talked about this week is that telling people, hey, you'll be able to use your 401k for down payment buying a house because there's people that have so much funds type of 401ks, and so there's a perception there that hey, now you could use your 401k to buy a house and not pay the 10% penalty, which is interesting. But we have people now
Now,
that access the 401k to
I
buy a
was going to say
house.
you've had customers do that
Yeah,
already, right?
yeah,
Here,
yeah. I mean, they're borrowing. I mean, they're gonna borrow it, and they pay themselves back and everything. But people do it, but when we have to dig more deeper into it. But I think it's more the perception. I mean, hey, the administration is doing things to help buyers. Here's another thing they're doing: free up your 401k. It should help some people. I think it would help some people, but I don't know if
yeah.
it's gonna be the panacea. But maybe all these things together does help buyers in general.
I think that's yeah. I think you have to look at it like that. I mean, they've come out with all these different things that have been more headlines than anything. But I mean, hey, a little bit of help here, a little bit of help there. Does it add up to something? Um, it certainly doesn't hurt. It certainly gives it's not. There's nothing negative, and so I do think that if it helps some more people, then great, and let's keep working on it. I mean, some of the affordability stuff is not an easy thing to solve with a stroke of a pen. You know what I mean? So
No, 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 no doubt about that. But good stuff. But yeah, so these are the things we'll see how that plays out. But going back to the institutional investor, I believe he did sign an executive order about that, but I don't think there's been an executive order on the 401k yet. That is something they talked about.
it's okay.
But
So we'll keep
interesting
our we'll
stuff.
keep our eyes peeled on that one.
Yeah, yeah.
So, Bill, one other thing that I saw in the news this week, the Washington Post had an interesting article about the incredible shrinking backyards of people. The gist of the article was that more people, because of affordability issues, because they've got a nice rate locked in or something like that in their house, it's more difficult to move. That been a push to expand or renovate the homes that they currently have, and so there's been people that instead of back in the day when it was very easy, hey, you're in a 3 bedroom, you want a 4 bedroom. Hey, it's real easy. If you got a rate real similar to what you had before, you can just buy the new house, sell that one. It's not as easy to go back and forth because of the challenges of walking away from that pretty loan. So you've got people that are expanding their 3 bedroom house to a 4 bedroom house.
Absolutely.
And so and we've certainly seen some of that, but apparently there's also, more, the Google search trends on that type of subject matter is on the rise. And so I mean, we have a couple ways that we help people that are thinking about that type of thing. So, I mean, one of them is like a line of credit, right? And I know
Yeah, I
you've had
mean,
some people do that type of thing.
historically speaking, people go out and they get a line of credit, and that might be more appealing now because the prime rate's been moving down. Usually these equity lines of credit are based on prime, so that's been more appealing. Or they normally were used to refinance, but like you said, if you get a rate in the threes or fours, maybe you don't want to refinance that first mortgage, just get a second mortgage, right?
Yeah, no, that'd certainly be one. And that would be, hey, you look at the value of the property now, and you take a line of credit out based on the way the property is and the value of the property and how much equity position you have in the property today. The other types of loans that we have are these renovation loans. And
It's a
the renovation
spectacular
loans
product. It's a great product.
the renovation loans are really interesting because what happens is the lender says, okay, and these are first mortgages, right? But then what they do is they say, okay, we're going to base this loan based off of the work that you're going to do to it. So when we get the appraisal loan and you say you're going to put on another bedroom or you're going to put in a pool, the appraisal and the way the loan is going to be based is based off of what it's going to be like when it's done. And so if you build all this equity into the property, then you get to use that as to your advantage in the pricing of the loan that you get. And you can use some of these loans. You can do that when you're buying the property. But just in the context of what we were talking about with this article and the renovation side of things, yeah, it's something that people may be able to. And there are some of the programs that if they don't have a lot of equity to get an equity line, sometimes these things can actually help you get it because you're increasing the value while you're getting the loan. You're doing this work to the property. So a lot more. We'll come back and do a more in-depth episode, and video about that topic.
Yeah,
But
great point.
but
Great
it's
product too. I mean, it's an
yeah,
excellent product.
but interesting that that's in the news, and you certainly I think that makes sense when affordability. People look to keep their house longer. They got to fix it up instead of just moving
Sure.
on.
Yeah, like you said, people used to say, "Hey, I'll just sell it and buy another one." But now people, they're locked into especially in Florida. They have a homestead property. The taxes are can only go up, with 3% per year, and if they expand, they don't have to move and deal with all that. So there's a lot of pluses to doing that. So,
Yeah,
definitely for sure. Yeah.
yeah.
So
So
all right,
I
yeah, we'll
think
definitely
that's
dig
about it for
deeper
this
on
week.
that on the future podcast. Yeah. So. But all right, well, sounds good. And then I know we're wrapping up here, and we did have the national championship game the other night, Craig, and Indiana took it to Miami, and I was kind of pulling for Indiana actually, but it
It
was
was
a
a good
great
game.
game though.
It was a good game, very entertaining, and great football season so far.
Yeah,
So
yeah,
not too much left.
yeah, yeah, yeah. Well, we're watching it as a spectator because the Dolphins aren't going anywhere, but that's all good. So at least we got a new coach and
But now,
GM,
now,
right? So,
now we have a new coach. Although I am excited, we have a new GM, and so maybe
yes,
they
me
can
too.
get the draft right. And this guy's supposed to be all
Yeah,
about the draft. So hopefully, if we can
yeah.
get that fixed, then maybe the future will be a little bit brighter for our Dolphins.
Amen. Hallelujah. All right, sounds good. Listen, you have yourself a great day. And remember, Craig, as always, we will see you at
At
the
the
closing
closing
table.
table,
Right on. All
right,
right,
sir.
have a great day, Craig. Take care.